Sukuk is a fantastic asset category by itself. It provides regular cash flow and it is more or less like a leased income. But the catch is the ticket size of even buying a single Sukuk bond can go up to $10,000s, which is not easily available for a retail investor. So, what is the solution? Stay tuned.
All right, welcome. Today, we're going to pull back the curtain on the hidden financial plumbing behind a really massive market that honestly is often misunderstood. We're going to look at how a raw financial commodity born in one part of the world gets processed and packaged in a completely different part, and what that tells us about where the real money is made. So let's just start with a kind of weird question. What on earth could Islamic bonds have in common with a simple loaf of bread? I know, it sounds strange, but stick with me because by the end of this, you'll see it's the absolute perfect analogy for a fascinating story about global finance, innovation, and where value really comes from. Okay, so let's get into it. Our story starts in what you can think of as a huge, productive, billion-dollar wheat field. And the main farmers in this field, they're countries in the GCC and Malaysia. They are fantastic at producing this financial wheat in absolutely enormous quantities. Now, this financial wheat has a name, Sukuk. You can just think of them as financial certificates. But instead of representing debt like a typical bond, they represent actual ownership in a real asset, like a building or an infrastructure project. That's what makes them compliant with Islamic finance principles. The bottom line is, they're real, they're valuable, and they are crucial to a lot of economies. So how did these things get started? Well, they're issued in massive bulk. We're talking the financial equivalent of shiploads of wheat. And you can't just go buy them on a public stock exchange. Nope, they're traded over the counter, or OTC, which is just a fancy way of saying they're bought and sold privately, directly between the big players. You know, banks, insurance companies, sovereign wealth funds. And these big institutions, they tend to buy them and just hold on to them for the long haul. And just to give you a sense of the scale here, get this. The typical minimum investment for one single Sukuk is around $200,000. So yeah, just like you and I don't go out and buy wheat by the container load, this market was never, ever built for the average person. And that brings us right to the heart of the problem. If this stuff is so valuable, why can't regular investors get a piece of the action? Why can't you just go out and buy some of this financial wheat? It's actually pretty simple when you boil it down. The entire system, from the very beginning, was designed for these massive institutional buyers. It was never meant to be sliced up into little pieces for individual households. And let's just look at how impossible the barriers are for a regular person. First, you've got that minimum price tag of $100,000 to $200,000. Now, to do this properly, you'd need to diversify, right? That means buying maybe 10 or 20 different Sukuk. All of a sudden, you need $1 to $3 million just to get started. On top of that, because it's a private market, the fees to get in and out can be huge. We're talking 1 to 3% of your investment gone. You could lose years of your potential returns just paying fees. And you have to see it from the issuer's point of view. For them, this was a perfect setup. They had stable, quiet, long-term investors. Why in the world would they want to invite all the chaos and daily price swings that come with having thousands of small retail investors? The system for the big guys was working just fine. So what we have here is a classic market gap. You've got a massive supply of this raw wheat on one side and all this untapped demand from regular people on the other. And who stepped into that gap? Well, the US financial system, which basically acted like the world's most efficient financial bakery and supermarket all rolled into one.
And this is so important to understand. The American innovation wasn't about creating a new asset. The underlying Sukuk, the wheat, it stayed exactly the same. The real genius was in changing the packaging. It was about changing the delivery mechanism to make it available to absolutely everyone.
And here's basically how that baking process works. Step 1. US firms import the wheat by buying up huge amounts of Sukuk from the GCC and Malaysia. Step 2. They mill it into flour. This is where they legally bundle all those bonds into something called an exchange-traded fund, or an ETF. Step 3. They bake the bread by turning that ETF into one single, easy-to-trade product. And finally, step 4, they stock the shelves by listing it on a US stock exchange where anyone, anywhere can buy a slice. And the result of this? I mean, it is a complete and total game changer for the small investor. An investment that used to require over 100 grand can now be bought for less than $100. A private, opaque market with high fees becomes a transparent public market with tiny fees. And an asset that was basically impossible to sell quickly becomes something you can trade any day you want. But wait, because the story doesn't stop there. After years of watching this model succeed, the original producers, the wheat growers, are starting to think, hey, maybe we should build our own bakeries. And that shift is happening right now.
It all comes down to this really simple but incredibly powerful question, especially in places like the UAE. If we grow our own wheat, why should we be importing our bread? Why go through this complicated, expensive international supply chain when you have the raw material and the customers right here? It just makes perfect sense to build that infrastructure locally.
So let's just compare these two models. With the old way, the fees and revenue flow out of the region and into the US. But with the new, local way, that money stays home. Local investors get to avoid things like US withholding taxes, and the whole thing is just cheaper and more efficient because you're literally cutting out the global middleman. It's all about creating a self-sufficient local financial ecosystem. And look, this isn't just an idea. This is really happening. We're seeing actual products being launched, things like government Sukuk aimed at retail investors with very small minimums. There's even a global Sukuk ETF now listed right on the Abu Dhabi exchange. This isn't just window dressing. This is the fundamental construction of new local market plumbing. Okay, so this all brings us to the biggest lesson in this whole story. If you really want to understand any market, you have to do one thing: follow the money. You have to ask who is actually capturing the economic value here. Take a look at this. For an investor in the GCC buying one of those US-listed ETFs, this is where their money goes. A slice of their return goes to the US fund manager as a fee. Another slice goes to the US exchange. Another chunk can even go straight to the US Treasury as tax. You see, the economic benefit, the profit, it flows to the place where the processing happens. And that right there is the key takeaway. It's not always the person who grows the raw commodity that makes the most money. In finance, just like in so many other industries, the real, consistent profit is so often found in the processing, the packaging, and the distribution. It really all comes down to this one simple idea. For years, the US financial system didn't need to grow the wheat. It just needed to own the world's best bakery. And because it owned the bakery, it captured a huge slice of the profits from a product that was grown thousands of miles away. So as we wrap this up, this whole story leaves us with a much bigger question to think about. What is the future of finance going to look like? Will it continue to be dominated by a few global supermarkets that process everyone else's assets? Or are we moving towards a world with more and more local bakeries, where regions build their own financial plumbing to serve their own people more efficiently? That's a trend that is definitely worth watching.